Hello, good afternoon, everyone. Hopefully you can hear and see us okay. Welcome to this Your Overseas Home webinar, and thank you very much for joining. My name is Sebastian Bampton. I'm one of the account managers over here at Your Overseas Home. Today we're joined by Robert Webb from Chase Buchanan, who is based over in the sunny and lovely Algarve at the moment. He's going to be talking to us a little bit about how Chase Buchanan can help manage your financial considerations when moving across to Portugal. So Robert, thank you again for joining us today. It's great to have so many of you joining us live or on demand today. And once Robert is finished presenting how he can help you on your journeys over in Portugal, we'll open up the floor to questions. You should see on the right-hand side of your screen a questions tab. So type your questions in there. Try and test Robert as much as possible. And after the presentation, we'll try and get around to them. If not, we will pass those questions across to Robert to follow up with you and the Chase team after this session. So we've got half an hour, so I don't want to speak for too long. Robert, I'll pass over to you. If you wouldn't mind just doing a quick intro to yourself,
Sure.
And also explain a little bit about how Chase Buchanan can help our listeners today.
Sure. Yeah. Okay. Right. Good afternoon, everybody, and a warm welcome from sunny Portugal. I'm right on the Algarve. It's a lovely day, lovely sunny, touch of wind, exactly what you need. So if weather is one of your requirements for retirement, you've got it in buckets here, that's for sure. Right, I'm going to discuss tax issues which would concern you when you're living here in Portugal. Okay, I'm not going to touch too much on visas. This is all going to be about tax and hopefully giving you some ideas how to save it. Right, so let's have a look. What's happened here? Right.
Do you need the next slide, Robert?
Yeah, I do. Right, here we are.
There we go.
Right, the seminar's divided into 4 parts. First, I'm going to explain a little bit about us, Chase Buchanan, and secondly, what we offer. Third, to give you an idea of where we're located. And then finally, I'm going to deal with the tax essentials that you'll need for living in Portugal. Right, okay, right. So who are we? We really are the equivalent of a UK IFA. We have offices here in Portugal, but we act totally on UK IFA lines. And that basically means we act for the client and we act in your best interests. So in other words, we're trying to find solutions that fit the client. It's as simple as that. Right. Our services would be those which are fairly common offshore and indeed in the UK. So investments, financial planning, retirement planning, UK and pension transfers, education fees planning. So we cover the whole spectrum. So if you've got an issue, we've probably got an answer for it. Simple as that. Okay. I alluded to our offices earlier on. There's the list. You can see we're pretty widely spread, Cyprus, France, Malta. We've also got an office in America, in the US. So if there's any American nationals listening, we can help you. It's a very technical area. It's a very difficult area, but we can help you. Offices, again, Spain, Portugal, Canada. So the kind of message there is we're widely spread and we can help regardless of the jurisdiction, really, where you are. Right, that's the basics. Now I'm going to get into the tax issues. I'm going to again split this into 4 parts. Income tax in Portugal, capital taxes in Portugal, tax planning in Portugal, and financial planning. Okay. Right. Now, tax residency in Portugal is all about residency. It's that simple. Now, if you're a tax resident in Portugal, you can be so in one of three ways. Either you live here for 183 days during the year. Now, the tax year here is the calendar year, and that is January to December, unlike the UK, which is April to April. So that does at times obviously cause a bit of an overlap. But the first issue is you need to be tax resident here in Portugal, either 183 days, January to December, or your main residential home is in Portugal, or your assets are primarily situated in Portugal. Most people, of course, will go with the 183. So really, that's the one to take on board. Right. Now, income tax. Now, you may have read a lot in the press about NHR. Nobody's ever heard of NHR. It's really obscure. It stands for non-habitual residence. So you think nothing to do with tax, but it's the complete opposite. And you'll probably find that quite common in Portugal. So it's something to kind of bear in mind. But it's been abolished. That's the point. It was abolished effectively from January. Whilst it was in existence, it gave you a tax concession for 10 years. So outside pensions would basically taxed at 10% flat for 10 years. And the other important item would have been dividends. They would have been taxed at naught. That has now finished. And that is what a lot of the media have focused on. But there are alternative methods of taxation, particularly for pensions, which are just as favorable as NHR, okay? But they've never been highlighted. We watch the press and the media all the time, and we don't see it mentioned at all, the alternative taxes options. But believe you me, it is available and very effective, and almost in a lot of cases as good as non-habitual residents, if not even better. Now, like the UK, your worldwide income would be taxed. So wherever income is sourced from, there would be tax in Portugal to pay, subject to double taxation agreements. But the key point is your worldwide income is taxed. Property rental, now this is an odd one. Property rental is always taxed in the country where the property is situated. So even if you're resident in Portugal, you would still be paying tax in the UK on UK rental income. Now, as I did say earlier on, with UK pensions, okay, there are different tax rates available, and we can help you on that. We have some great accountancy contacts, and we can certainly look at it and certainly help you get the right system. Right, capital taxes. Capital gains tax is 28%, similar to the UK in a way, really, but there's no allowance. The allowance in the UK has just been slashed yet again, but there's none here. Again, on the double taxation agreement, if you sell property, your UK property, after a certain period of ownership and residence in Portugal, you would pay tax, capital gains tax, in the UK. You'd have to account for it here, but the primary source of payment would be in the UK. If you sell some shares, some in the UK or elsewhere, outside Portugal, again, that is taxed in Portugal. So you have to get used to the different jurisdictions and who taxes what and where. Wealth tax, this is fantastic. There is none in Portugal, absolutely none. There is a property tax, but it only starts at 1.2 million euros in respect of joint ownership. And it's not very onerous. It's not a big tax. So really not a great deal to worry about there. Tax planning. Now, this is the other issue. you will be in Portugal, so you have to think Portugal. Whilst there may be an overlap with the UK, your primary source, your primary focus is Portugal, and the laws are different, the tax rates are different, and it's something really that will become. Initially, it's not easy to get your head around a lot of it, because taxes can be paid in different jurisdictions at different rates, so on and so forth. But that's why we're here to help you through this jungle. And initially, it will appear to be a jungle, but with our help and our contacts, we can certainly help you through it. I don't know if many of you would know it, but UK IFAs or any financial institution in the UK cannot advise residents in the EU, and that obviously includes Portugal. This is all because of Brexit. So if you have your local IFA in Plymouth and you're coming down here, I'm afraid to say your man in Plymouth cannot advise you. Okay, so that's something else to take on board. Right, UK pensions. Now, before you get here, it would be practical to take the tax-free cash from your pension. Now, tax-free cash is around about 25%, give or take, and that is tax-free in the UK, but it's not tax-free here. So if you wait until you get down here and then take your tax-free cash, you're going to get a tax bill. So to avoid that, consider taking the tax-free cash in the UK whilst you're resident before you depart. Okay. This next one, the SIP. The SIP is a self-invested personal pension plan. A lot of people would have that. A lot of people would have personal pensions. They have company pensions. You might want to consider transferring those to offshore plans. One of them is called a QROPS. It's a qualifying overseas pension scheme, and basically you transfer your UK pension into it. It makes a lot of sense, because if you're coming to Portugal permanently, it doesn't make a lot of sense to leave big assets in the UK. Remember, your UK IFA cannot advise you on your pension anymore. So if you come out of the UK, you're basically on your own, and you're leaving the pension in the UK to just pot luck, because nobody's really looking after it. The other issue would be inheritance tax, which I'll come on to later. But there's an overwhelming argument for transferring UK pensions to the QROP, the overseas plan. UK ISAs, unfortunately, they're taxable in Portugal at 28%. Tax-free in the UK, of course, but not in Portugal. So again, if you've got some sizable gains, it would make sense to sell the ISA before you got down here, exactly the same as the pension. Okay. Right. Okay. Let's have a look. Right. Okay. Financial planning now. If there are any Irish nationals, any Irish residents listening, watching, again, carrying on from what I was saying about UK pensions, it would be almost certainly to your advantage to transfer the Irish pension out to an offshore plan. The reason for that is the vast majority of Irish plans provide an income in retirement from a fund. It's called an ARF. It's an approved retirement fund. And basically what it does, it provides an income. Now, the bizarre thing is, it's not a pension. It sounds crazy, but it's not a pension, okay? And because of that, the Irish tax authorities have the taxing rights on the ARF income, even if you're living in Portugal. So if you're living in Portugal and you've got a pension, do not, or rather consider not taking the ARF, because you will always have to pay Irish income tax, Irish PRSI, and Irish USC. Once transferred to an offshore plan, that disappears completely, and you would have freedom of investment and income levels. So they're very generous. You can take a considerable amount of income in margins, so you've got much more flexibility, much more perspective than ever there is in the ARF. Right, UK state pensions, they are unaffected, okay? Basically, because even if you're a UK resident, they are always paid, state pensions are always paid without deduction of UK tax, okay? But it's part of your worldwide income, and the pension becomes taxable in Portugal. So you have to report it in Portugal and pay it. On pensions in Portugal, there is an allowance of 4,000 euros. So you can deduct 4,000 euros from your pension. And if you apply for the favourable tax rate, believe you me, we can reduce your income tax, quite considerably. QROPs, I did touch on this earlier. A detachment from the UK, both physically and asset-wise, really is quite logical. That's quite a consistent thing. In other words, if you're here, why would you want big assets left in the UK? Most people don't. The asset that tends to stay in the UK is, of course, property, both one's home and buy-to-lets. But buy-to-lets are now, let's put it this way, not the most favourable of investment in the UK. And of course, there's tax to pay if you were to sell. But we can take care of that as well. Right, QNUPs. Now, this brings into play inheritance tax. Now, the big problem with inheritance tax is that a lot of people, when they come down here from the UK, think that because there's no inheritance tax in Portugal, they will not have to pay UK inheritance tax. It's completely wrong, absolutely wrong. The vast majority of UK nationals coming down here would be what we call a domicile, a UK domicile. And without going into all the details, effectively, you would still be a UK domicile for 5 years after departure from the UK. Now, during that time, which is known as the freezer, you're in it, there's nothing you can do to avoid inheritance tax. Inheritance tax starts at £325,000, and any excess is taxed at 40%. The tax is on your worldwide assets. So just think of the value of your property in the UK, 325,000, not much. So, for example, an estate of 825 would be 500 excess, and your tax would be 200. Okay, and that would be with you for at least 5 years. There are ways that we can reduce it, and we're more than happy to help you with that. I think, yes, that's about it from me. I've covered a lot, fairly quickly there, but I hope I've got the main points for you, and I'd be happy now. We've got, 5-10 minutes or so for questions. So if anybody has got anything, please fire it at me.
Robert, thank you very much. Yeah, so there's a lot to go through. Even my head is a bit scrambled by all that. But
Yeah.
you know, you put it nicely. You know, it's a jungle, but you guys really are the experts that can help navigate that. There is so much to think about when buying a property. Well, here in the UK, the US, wherever it may be, but even more so when you're buying a property overseas in a foreign country, in a foreign land. And you really do have to be careful and ensure that you are given the right advice and expert guidance around each aspect of that journey. So yeah, thank you for sharing and going through that. Yeah, we do have a bit of time now for some questions. I know there's
Sure.
been quite a few that have come through throughout the presentation, Robert. I'll try and get round to answering all of them if we have time.
Sure.
But the first one actually came through straight away from Linda. So Linda asked, is there a tax-free allowance? I know you mentioned there about 4,000, I think, but is there a bit more clarity you can add around that, please, Robert?
Right. Right. The way to answer that is by saying, right, the UK has a personal allowance. Okay, it's £12,000 odd. So you deduct that from your gross income, and then your tax is based on the net amount. Here, as such, there is no personal allowance. The only relevant allowance would be the pension allowance, and that's 4,000. That's 4,000 per person. So not too bad. Not too bad. But if the key point here is, if the pension is relevant, we can use an alternative method of taxation, which together with the 4,000 allowance will reduce the tax considerably. I don't really want to go into too much details because it's not easy to explain. But if anybody wants to follow up on that, please get in touch with me, and I'll really explain it quite clearly.
Yeah, perfect. Thanks, Linda, for your question, and yeah, Robert, thanks for going into as much detail as you can. I think with a lot of the conversations that we have here and a lot of questions that come through, it is dependent on your unique requirements and situation, and it does take a conversation with Robert or someone else from Chase to really give you the full answer to your question and your individual requirements. Just a quick one here. I think we had Melanie asked. Well, she's based over in the US. Wanted the information for the USA office, which was sent across to you after this session. The next question I have up here is from David. Robert, so David or Dave has dual citizenship between Portugal and the US. Dave's wife currently only US citizenship. I have a SS and a union pension. Any advice for such a scenario?
Yes, you need some good technical advice on that. If you could kindly just drop me an email, I'll put you in touch with our American department. It's headed up by an American, and it's far better that they deal with it right from the start than me kind of give you any inside information. So really, drop me an email if you can, please, and I'll put you in touch with them.
Yeah, thanks, Robert. And yeah, as you said, Dave, I think it sounds like, given your requirements, it takes a conversation on a one-to-one basis to kind of really understand your situation. So Edward Williams, next question here, Robert, is Edward asks, are these income tax comments that you mentioned in the presentation relevant to tax residents or everyone? So all of those tax topics relevant to someone buying a holiday home and someone actually fully relocating?
Yes, they can, because primarily the comments are directed at residents and tax residents here. But if, for example, you own a second home down here, or you get rental income or something like that, yes, you would be subject to Portuguese tax. And if you're a UK resident, then you're going to have to go to the double taxation agreement to work it all out. But primarily, you'd have to pay tax, for example, capital gains tax. If you're a UK resident, you would have to pay capital gains tax on your worldwide gains. Now, that means paying tax in Portugal and the UK. but you get a credit for one against the other. So it tends to get a bit messy. So yes, it's a two-tier system, if you like, non-residents and residents stroke nationals. Yeah.
Thanks, Robert, and Edward. Thanks for your question. We have another one here from Mark. Again, US related question, Robert, around taxation of US Social Security payments, which we just touched on as well. Did you mention there was a Portugal tax agreement with the US on
yes,
that?
There is. Yeah, there is. Because dealing with US tax is a very specialized area, we pass our inquiries straight on to our American department. We've got 3 people in there, and they're well qualified. The head is an American himself. He's been in the industry for years. He knows it backwards. And I'd rather they deal with this right from the start. So again, if there are any Americans watching, please email me and I will put you in touch with our department, and they will then get back to you.
Yeah, absolutely, Robert. It's just to everyone listening in, I'm sure you can see it on the top of the screen there. There's you can scan Robert's contact information as well. Obviously, you've messaged him directly. We will also pass across your details to the Chase Buchanan team after this this webinar. So yeah, thanks for the question. We've got quite a few. We've got 16 questions, new questions to get through. Some of them are quite unique to individual requirements, which I won't put you too much on the spot about numbers and stuff like that, Robert. But one here from Ray Chipman asking, can you confirm what the minimum income is for moving to Portugal for a couple where one is at retirement age and the other does not work? Can they both be treated as retired together?
Probably not. Minimum income requirement is about 9,000. It's just over 9,000 euros. That's all it is.
Okay.
But again, that's a specialist area. If Mr. Chipman gets in touch with me, I'll be able to work it out for sure.
Yeah, thanks, Ray. Robert. Ray, I've just seen you had a question before that as well, which is to cater towards your unique requirements, which we'll of course pass on to Robert.
Sure.
So we've got a couple more minutes. One of the questions actually I wanted to ask you, Robert, while I look through these is there's a lot to think about when buying a property overseas, as I mentioned, and it can be a bit of a minefield to know where to start. When would you recommend someone should actually start speaking to yourself or a member of the Chase team in preparation for their plans to actually move across to a new country or Portugal in this situation?
Well, the answer is simple. As soon as possible. I have clients that I've been talking to now for about a year. Okay, it's not so much what's happening in Portugal, but what's happening in the UK as well. So in other words, I'm retiring from my job. When's that? June next year. I've got to sell the house. When are you doing that? Well, don't know. How long is it going to take? So all these are a little bit unknowns, and then you've got to start applying for visas. So the only thing I would say is well in advance. And if people think, oh God, they can't help me yet because I don't even know exactly where I'm going or what I'm doing, believe you me, we can give you some massive pointers, and we can put you in touch with estate agents, lawyers, accountants who I trust, and they will provide a fantastic platform for you. The more information you get, the sooner you get it, the better. That's really what I can say.
Yeah, I couldn't agree more with you, Robert. I think the natural approach would be for people to immediately think about finding the right property, but there's a lot of things before that point in the process which are really important. At least you speak to someone, they're there, and that the process. We've been working with one another, Robert, for I think 3 if not more years now, and you and the team at Chase have helped countless numbers of our buyers on their journeys overseas. So yeah, everyone listening in, we'd really recommend taking a bit of time to speak to either Robert or his team after this webinar, in preparation for your plans to go across and and look at properties and put down offers and things like that. But yeah, Robert, and everyone listening, we've run out of time this afternoon, so I do apologise. I know there is a lot of questions in there that we haven't got round to. As mentioned, please get in contact with Robert directly via his contact details on the screen. We will be passing these questions across as well to you, Robert, and the Chase team. And yeah, please, if you found this webinar useful, please leave us a comment on Trustpilot. We'd really appreciate your feedback and reviews on this session. And then finally, Robert, to yourself, thank you again for your time, your knowledge and experience. Really, really appreciate it. And yeah, I say appreciate everyone else listening in as well.
Yeah, no problems at all. Well, thanks for your time, everybody. I really appreciate it. And as I say, no matter how small you think it is, please drop me an email, particularly you guys from the States. I'll put you in touch with the right people and get you on the right path.
Brilliant. Yeah, thanks, Robert. And thanks everyone listening. We'll hear from you soon, and good luck with the property searches.
Yeah, indeed.
Cheers, Robert. Take care. We'll speak soon.
Yeah, fine.
All the best. Cheers. Bye-bye. Bye-bye.